Hi, welcome to the second mini lecture for Chapter 1. And actually, of the chapter, this is the most important section. And what we're going to be focusing on is Learning Outcome 1-4, define and give examples of different types of costs. And what I would recommend to help you understand this portion is to make flashcards of the various types of costs and their definitions so that you can quiz yourself, because we'll be using this information for the remainder of the semester. Okay, let's get started. The goal of managerial accounting is to provide managers with information they need to carry out their three functions: plan, implement, and control. And as we are told, much of the information that managers need to make decisions is based on cost data. Let's take a look at the definition of cost. Cost is the value of what is given up during an exchange. When you incur cost, you give something up, such as money or time, in exchange for something else. Now, there's a lot of different labels or categories that we're going to be talking about. The first category is direct costs versus indirect costs. And whether a cost is direct or indirect depends on the cost object. In other words, what you're trying to determine the cost of. For example, if we're talking about the direct costs of making this pen, it would be the ink, the barrel, the labor involved, and those would all be direct costs. Now, what about factory utilities or property taxes? Well, they wouldn't be directly traceable to this pen. However, they would be directly traceable to the factory. So let's take a look at those definitions here. Costs that can be directly and easily traced to a specific cost object are called direct costs. So as we mentioned, the plastic barrel, the metal, the ink, and the labor involved in producing that pen could be traced to the pen. However, the factory property taxes can't really be directly and easily traced to the pen, so they would be considered indirect costs. And indirect costs are costs that cannot be directly traced and easily traced to a cost object, or, and this is a big one, we'll be talking about this more when we go through some problems, costs that are not worth the effort of tracing. So, if the pen is the cost object, then the factory property taxes or factory insurance could not be traced to the pen. They would be indirect. However, if the factory itself were the cost object, then the property taxes and insurance would be directly traceable to the factory. So whether a cost is indirect or direct depends on the object, the cost object. Okay, second category, and that's variable versus fixed costs. And we're going to be using these quite a bit during the course of the semester, especially when we do cost, volume, profit analysis. So this will be really important. It says for internal decision making, managers are sometimes interested in how costs will change if something else changes. In other words, cost behavior. So let's take a look at variable costs. Variable costs are those that change in total in direct proportion to changes in activity. Circle that word total, or put a square around it. Do something to call your attention to it. Because although costs vary in direct proportion to change in activity, per unit variable costs remain the same. And what you can think about there is, the example is the hourly wage versus your total gross pay. Most of us have had jobs where we're paid on an hourly basis, right? So let's say you're paid $12 an hour. That would be your hourly wage. However, your total gross pay depends on the number of hours you work, right? So if you're paid $12 an hour and you work 10 hours, you get paid $120. If you get paid $12 an hour and you work 20 hours, you get paid $240. So the example of the variable cost there that changes in total is your total gross pay. That's dependent on the number of hours you work. That would be the change in activity. So the more hours you work, the larger the pay. There's a direct proportional change in your gross pay compared to the change in activity represented by hours. However, your hourly wage does not change as long as you stay at 40 hours or under. Your hourly wage remains the same. So when they say here that we're taking a look at the number of units produced, for example, the cost to make 10 pens is less than the cost to make 100 pens. There's a direct and proportional change. The more pens you make, the more material you'll use, the more labor you will use. So in total, variable costs change in direct proportion to the change in units or change in activity. But the cost per pen remains the same. Fixed costs are those costs that stay the same in total, regardless of the activity level. So for example, property taxes for the factory, or if the factory rents space, rent for the factory will remain the same regardless of how many pens are produced. You're still going to have to pay property taxes. You're still going to have to pay your rent regardless of the number of units you produce, even if you don't produce any units, right? So they stay the same in total regardless of the activity level within a range of activity. However, unit fixed costs vary inversely, in other words, in the opposite direction, with the number of units produced. So for example, if I said we have $100 worth of fixed costs and we need to spread those out over 10 pens, that would mean it would be fixed costs of $10 a pen. However, if you make 100 pens, then you spread that fixed cost over 100 pens and the fixed cost becomes $1 per pen. As the pens go up, the fixed costs per unit fixed costs go down. They vary inversely. Now let's talk about another category of costs, and that's manufacturing costs versus non-manufacturing costs. Manufacturing costs include all costs necessary to produce the product, to produce that pen, for example. And there are three categories of manufacturing costs, and all manufacturing costs have to fall within one of these three categories. Direct materials. They are the major material inputs that can be directly and conveniently traced to the final product. That's a category that we just talked about, direct costs. Direct costs are directly and easily traced. So direct materials are a form of direct costs. Direct labor is the hands-on labor, the labor of just the people actually touching. Sometimes we call it touch labor because it's the folks who actually produce this pen. Not the janitors, not the security guards, not the supervisors or plant manager, but the people who actually put that pen together. Two examples of direct labor are fabrication, which means to make the parts, and assembly, which means to put the parts together. Both fabrication and assembly workers are direct labor because they're going to be touching that product. They're going to be putting that product together and making the parts for that product. So both of those can be traced directly to the product. Manufacturing overhead, however, includes all manufacturing costs other than direct labor and direct materials. So that would be all of our indirect costs. So examples of manufacturing overhead would be things that we talked about just a few moments ago. Property taxes for the factory, rent for the factory, utilities for the factory, the janitor's wages, quality control workers, the plant manager. Anything that's not direct materials and direct labor, but it occurs in the factory, is considered manufacturing overhead. Now, direct materials plus direct labor added together are called prime costs because they represent the primary costs of making the product. So when we add direct materials plus direct labor, that gives us the total prime cost. When you take direct labor and manufacturing overhead and add those together, those are called conversion costs because they are required to convert direct materials into a finished product. So that's direct labor plus the manufacturing overhead. That gives you your conversion costs. Now, what about non-manufacturing costs? Those are costs associated with running the business, not producing the product itself. Running the business and selling the product as opposed to manufacturing, and they usually are classified or categorized into either marketing or selling costs, and that's to get the final product to the customer, and then administrative costs, and that's running the overall organization. Now another category, and then I'm going to show you a little diagram that will help you remember these. Product versus period costs. Whether a cost is a product or period cost determines how and when it will be matched against revenue on the income statement. And in accordance with GAAP, generally accepted accounting principles, all manufacturing costs will be treated as product costs. That means they are going to become part of your inventory until they're sold. They're going to be counted as an asset on the balance sheet until the product is sold. Non-manufacturing costs, however, are considered period costs. They are never counted as inventory, but they are immediately expensed during the period they are incurred. And remember, the word incur means to realize the benefit of a cost. Now, we're going to be getting into this more in the next chapter, but the flow of product costs follows the flow of the physical product. First, materials are requested from our raw materials inventory, and they're recorded in our work in process inventory once work begins on a product. And direct labor is added as well there. Once the project is completed, finished, but not sold, it's taken out of work in process inventory and transferred into finished goods inventory. And it sits there, and an inventory account, still an asset, until it's sold. And once that product is sold, it then goes on to our income statement. You might remember that journal entry, debit cost of goods sold, which is an expense account on the income statement, and credit to reduce the inventory account. We learned that in Accounting 116. So those goods remain in the inventory account on the balance sheet until the product is sold, at which point they will be called costs of goods sold, which is an expense account on the income statement. Non-manufacturing costs do not relate to the product at all. They are expensed in the period incurred. Now this diagram is in the book. I kind of copied and pasted it here, so there's the copyright information. I did not create this. This shows us our three product costs, our three manufacturing costs: direct materials and direct labor, which are direct costs. They can be easily and conveniently traced, and then manufacturing overhead. They get added into work in process inventory until they're completed, then they become finished goods inventory. Remember, inventory is an asset. It's reported on the balance sheet. So product costs are assets until they're sold. And then once sold, we debit cost of goods sold, we credit the finished goods inventory, and they are now on the income statement. The cost of goods sold is subtracted from the sales account to give us gross profit. With regard to period costs, which are non-manufacturing costs, we expense those in the period they are incurred, the period we receive the benefit of that cost. So they are expensed during the period incurred, and they go directly onto that income statement. Now, I am not very good at drawing at all. However, if you have a sheet of paper handy, or maybe a notebook page, you might want to stop the video, if you don't, and grab a pencil or pen, and perhaps your art can be a little bit better than mine. This might help you remember the different cost categories. Okay, so first of all, I'm going to draw a factory. And again, I warned you already, this is not my expertise here. Okay, so we'll call that factory. And here's another building. We'll call this the headquarters. This is where you administer the company, run the company. We'll call it HQ here for headquarters. Okay, everything that happens in the factory becomes part of the cost of the product. Everything that happens in the factory, all costs incurred, I should say, in the factory becomes a cost of the product. In fact, let's put that underneath here. All costs that occur in the factory must fall into one of these three categories and become part of the product cost, which means they become part of the inventory, right? And we learned that the three categories are direct materials, which are materials that can be easily and conveniently traced, directly traced to that product, like we were talking about the pen, the plastic, the ink, the metal. And then there's direct labor, sometimes called touch labor, because it's the folks who made the parts to the pen, that would be the fabrication labor, and the people who put it together, that would be the assembly labor. Now, any costs incurred in the factory that is not a direct material or a direct labor is automatically going to be called manufacturing overhead. So that would be things like soap and paper towels in the washroom, wax for the floors, the janitors wages, the security guard's wages, anything that happens in the factory, any costs that are incurred in the factory has to fall into one of these three categories, and they become part of the cost of the product. All of those product costs are going to be in your inventory, which then goes onto your balance sheet, either as work in process inventory or finished goods inventory if it hasn't been sold yet. So these are all product costs. Everything that happens outside the factory is called a period cost. These are non-manufacturing costs, and these costs are expensed as incurred. And there we go. And that immediately goes on to the income statement. In the period they are incurred, the period that you receive the benefit of that cost. And we said that there are two categories of period costs. We have the marketing and the selling costs to get that product to the customer, and then the administrative costs. So examples of marketing and selling costs would be things like sales commissions or salaries, advertising, depreciation on the store, marketing, delivery. Administrative costs would be salaries of the CEO and the CFO. It would be depreciation on the offices, be supplies to run the offices. And those are all period costs immediately expensed on the income statement in the period that they are incurred. So I hope that was helpful for you. Okay, just a few more cost categories. First of all, relevant versus irrelevant costs. And for information to be useful, it must be relevant to a particular decision. Relevant means that it has the potential to influence that decision. Irrelevant means that it will not influence the decision. So for a cost to be relevant, it must meet both of these two criteria. It must differ between alternatives, and it must occur in the future. So let's think of an example here. I'm going to flip over my little chart and let's talk about a trip. Let's say we're taking a trip to New York City, and you're trying to decide whether you're going to fly or drive. And to make the decision, you're going to be considering different types of costs, whether they're relevant or irrelevant to the decision. I'll put R for relevant and I for irrelevant. Okay, how about the cost of the plane ticket if you decide to fly? Would that be important to your decision? Yes, that would be relevant. If instead you decide to drive, how about the costs of driving? The gas and the totals. Would that be important? Yeah, you might want to compare that to the cost of the plane ticket. That would be relevant. How about boarding your dog during the time that you'll be gone on the trip? Well, that's irrelevant. The reason is it doesn't differ between the alternatives. You're going to have to board your dog whether you fly or you drive. So we shouldn't be considering that cost. It won't differ between alternatives. What about your vehicle registration? You had to register your car in order to be able to drive it. You did that last January. Is that relevant? No, it's not relevant because it's a cost that happened in the past. That's called a sunk cost. Only future costs should be considered relevant. Relevant costs are costs that differ between alternatives and that will occur in the future. How about your hotel costs? Relevant or irrelevant? Now, those are irrelevant as well because whether you fly or drive, you're going to have to pay for the hotel. So that's how we think about costs, and believe it or not, it's very important to our decision-making process. Let's see. So costs that differ between decisions are often called differential. The word differ is right in there. And as I mentioned a few moments ago, costs that, to be relevant, costs have to occur in the future. If costs have already occurred, they're called sunk costs, and they are not to be considered when deciding, when making a decision between alternatives. The last category here is out-of-pocket versus opportunity costs. An out-of-pocket cost involves an actual outlay of cash. For example, for your trip, you're going to have to pay for the gas and you're going to have to pay for the tolls. Those are considered out-of-pocket costs, or your hotel for that matter, your plane ticket. Opportunity costs are the costs of not doing something. So if you go on the trip, you're not going to be able to work for that weekend, and you're going to lose the wages that you would have earned that weekend. You're giving something up in order to take the trip, so that would be the opportunity cost, whatever you would have earned for that weekend. This is one more page from the textbook. I just want to point this out. Again, a really helpful handout for the different cost categories. One category here is cost traceable, and that helps you decide direct or indirect. Is the cost incurred to manufacture a product? If so, then it's a manufacturing cost and has to fall in one of those three categories. If it's not required to manufacture a cost or product, it's a non-manufacturing cost, and it's either general administrative or selling. And then finally, will the cost change with a change in activity? And if it does, it's variable. If it doesn't, it's fixed. And remember, will total cost change. So we're done with going over our cost categories. Again, please make flashcards for yourself for these various types of costs, because it will really help you in the future as we move forward through the semester if you can remember what those categories represent. Take care.